Hello everyone, Tim Erickson back for another video. This time I'm going to be doing a quick update on all the activity on week 2 in my $10,000 to $100,000 investing challenge on Robinhood. I apologize for uploading this a few days late. I actually had recorded it previously and I don't know what happened to the file. I only had about half the footage there that I intended on. So re-recording right now and just want to dive in real quick to update you guys on the challenge for week 2. For those who've been following the challenge in the week 1 update, we had deployed most of our collateral and all of our cash has purchased the stocks. The collateral's been mostly deployed already in options in the form of put credit spreads. For those who are new to the channel, I do have other videos explaining the put credit spread and all that. But for now, just wanted to dive into the trades we actually made during this week. This first one here was a spread on SPY, which is a ETF that tracks the S&P 500. And for those who are already, have been following the channel or are already familiar with spreads, you know what this means. But essentially, this is the combination of two options contracts. I have sold a put on SPY at a strike price of $380 and at the same time purchased a put at this $379 strike price, which limits my maximum exposure to the difference in these prices times 100 shares. So you see there's a $1 difference times 100 shares. My max loss and the total collateral required for this trade is then just $100. So you see here I did these with an April 9th expiration date. It is the weekend, and so this is now less than a week away. This will expire this coming Friday. I opened it obviously beginning part of last week, so I opened them, it was maybe a week and a half or so until they expired. I got a $10 credit for just my $100 collateral. So again, the goal being make 10% on my collateral in just 10 days is a pretty phenomenal return. So hopefully this works out. As you can see, it's already practically worthless. The market value is estimated to just be $1. I received 10. So depending on how the market looks on Monday and Tuesday next week, I may elect to try and close this if I can close it for just $1 or $2, and that way I could reuse that collateral for something else. If there's nothing else super attractive, then I may just wait and let it expire worthless and not have to pay anything to close it. But this was the first option that I traded. I think I am going to plan on doing another video that talks a little bit more in depth about the options on indexes like SPY and whatnot, because I think they are a pretty interesting and powerful option because they have a lot of expiration dates. But more on that later. For now, moving on to the next trade we made this week. I opened up these puts on Enterprise Products Partners. These are actually opened at strike prices of $21 and $20.50. So we have a 50-cent spread. So 50 cents times 100 is $50. So I need $50 collateral for each contract. You'll see here I actually did 5 contracts of this one. Now this price is a little closer to the money than I usually like to do. Those who've been following my channel know I like to be pretty far from the money and to have a really high probability of them expiring worthless. You see the current market price for the stock is $22.27. So we're only $1.27 above that, which is probably like 6% or something. It's not super high, right? But the reason I felt like that this might still be a safe option is I did an expiration date of April 23rd, which is only 3 weeks away now. So that expires very soon, which is very attractive to me on these puts because, again, the sooner they expire, the sooner my collateral gets released and I can go open more puts and get some more money. So the short term is obviously attractive to me, but also Enterprise typically has their dividend date coming up at the end of April. So the stock pays a 45-cent change dividend per share. So given that this is either the last or second to last expiration date before their dividend date, depending on what it actually is, I don't believe it's been announced yet exactly the date, but it always is towards the end of April. I feel like the stock should probably be trading higher closer to that dividend date because if you own it before, you get the dividend. So my reasoning is, even though that this price of $21 is closer to the money than I usually like, because it has an upcoming dividend date, I feel like that's one more reason why the stock should trade higher and not lower. And again, my goal when I open these is to keep the stock price above $21. Anything above $21 and these options expire worthless, I keep the credit I received. You'll see here I received $25 and I did 5 contracts. So that was $5 per contract. I have $250 collateral, so I'm getting 10% on my collateral in 3 weeks, which again, I feel is pretty attractive. If I come back to my list here, I believe I also did open 2 more puts on Energy Transfer, and that was just the same story. Their dividend date is usually the beginning of May, and so I did the last expiration date in April here. I think when I opened them, I got 8 cents credit. I had some open from previously they got 7 on, but the 2 more I opened, I got another 8. And it just, again, with their dividend date coming up and it being pretty short term, I felt like that was a good bet. So open that one. And then the other big trade I did this week is I did close out one of my positions. Now, since it's closed, I can't really show it on here. And because I always have a lot of orders open that end up not filling or being canceled, my history is just full of canceled options orders, so I can't really scroll down and find the one where I did close it, because it would just take too long. But for those who remember from my other challenge, I did have a put credit spread on WP Carry with a May 21st expiration date, and I had them at prices of 65 and 60. What you'll see here, it's currently estimated is only 20 cents. I closed it early in the week when the price was a little bit higher. I actually paid 35 cents, which again, because it's times 100 shares, this is actually $20, and I paid $35 to close it. This is one that I actually got a $75 credit when I opened it, so I got to lock in $40 profit with no more risk. And then that $500 collateral I had, because again, these puts are $5 apart, so 5 times 100, I need $500 collateral to open this position. That was released, and I could use that to then turn around and open in something else, which I did on AbbVie here. So you'll see here, I opened these AbbVie puts. They expired July 16th, which is a little over 3 months, maybe 3.5 months away. That is a little bit further out than I usually like to do, but I felt like these were a bit safer, and the credit was a lot higher too. I'm getting anywhere from 10 to 15, maybe sometimes 20% credits on my 2-month or shorter puts. This one I got a little bit higher. It's almost 25% because I have $500 collateral. You see here I got a credit of $124. So I say 500 collateral because I actually have 2 contracts. You'll see here the spread is $2.50. So each one has 250 collateral. I did 2, so I basically reused that collateral from closing the WP Carry spread to open this one. And as you'll notice, I closed the WP Carry spread for a cost of $35, locking in a $40 profit, right? Because I received $75 when I opened it. I used that same collateral to open this position for another credit of $124. So you can start to see really the power of this strategy, and that as your collateral gets released, whether that be you closing the positions and locking in a profit or just letting them expire worthless, once you're able to reuse that collateral and up something else, you get a lot more money. So $124 is obviously a nice boost. I took that money and I bought 1 more share of AbbVie, so you'll see here I now have 16 shares. Other than that, wasn't a ton of action on the portfolio this week. As we get into April, as you guys see, I do have a lot of puts expiring at the end of April. So hopefully the prices on these get really cheap to the point where I could close them for just a couple pennies, and if so, I will look to do that and reposition the collateral and have a lot more exciting updates. If not, we may have to kind of wait out towards the end of the month until these start to expire, and then be able to reposition at that time. But either way, definitely pleased with how the challenge is going so far. As you guys see, we're up to $10,601, 6% gain essentially in just 2 weeks. And if we're able to keep that up, I think we'll be able to accomplish this goal relatively quickly. Hopefully we have some even better weeks ahead and not too many down weeks, but definitely excited about what the future holds in that regard. So now the last thing I wanted to do is come in here and show you guys just the return on my stock positions, as I've been spending a lot of time talking about the options, and I think that's useful because I think most people don't know as much about options, and also that is kind of the bread and butter of my strategy here. How we're going to be making most of our returns is going to be in our options, but you'll see here we have done fairly well in the stocks we've picked also. We do have a very slight loss in CVS, about 27 cents a share right now. That is still a stock that I like. I'm not going to be panic selling those or anything. I'm going to be continuing to hold them for the time being. But Bristol Myers Squibb, ever so slight profit. I wish that were more, but again, we're only 2 weeks into it, so I'm sure with time, hopefully we'll start to see some more gains there. But you'll see several of the other positions do have nice gains, with Oracle being the big winner. I'm up over $100 on my Oracle purchase. So the one thing I wanted to point out here is it does show you not only the total return I've earned on all these shares, but it shows the total equity also. And if you were to add up all these equity numbers, you would actually get a number that's over $11,300. Right? It's a little bit more than this $10,600. And the reason for that is because our options, if you look at them, they actually are showing negative market value. So if you were to take that total value of our stocks and then subtract all of the current value of the options, that's what gives us this current market value of $10,600, right? But what that really means is, assuming all our options expire worthless, if the stock prices remain unchanged, then our portfolio value would be $11,300 and change dollars, right? So you can really see the strength of this strategy. That would be a 13% return, and we've only actually used a little over $5,000 as collateral for our options, right? So the gains on our option collateral is looking very healthy, and definitely happy to see that. And this is it for the week 2 update. I will try and be a little bit more prompt in getting other updates to you guys in the future. But for now, if you enjoyed the video, please remember to like the video, subscribe to the channel, leave a comment below if you have any questions about anything I'm talking about, or any other stocks you'd like to see me discuss and or consider for the challenge. But thanks again for watching, and I look forward to catching up with you guys next week.